It's all yours, Corman.
Okay. Hey, everybody. So, our current administration has the I have too much on my plate syndrome and is not capable of multitasking. You can't be the leader of a free world and get caught off guard with no ambassador to Israel. It's like trying to contain a kitchen fire. You know, you're in the kitchen, you're cooking, little fire starts, and you think, oh, if I put the lid on it, or if I put it in the oven, or if I put it outside, maybe it'll go out on its own. But everything that you do and trying to ignore it and thinking that it's going to go out on its own, it just gets worse. And then you're caught without a fire extinguisher and you have to go run to get one. That's this whole situation right now with the US trying to stick its foot or nose or hand or whatever you want to stick in a situation yet again into somebody else's business, and we're not prepared. So today Biden was asked about the Israel and Palestine issue and was not prepared. It really makes us look bad as the United States when we come in with a new administration and we're not prepared for world issues. We started this whole term, oh, for the people, we need to do this, we need to do that, everything in home. But then we forget that there are countries out there who need us to an extent. Even though, yes, we will be sticking our nose in their business, there is a reason why we need to make sure we have ambassadors and people in place to help with world issues. Now we're stuck, and Israel and Palestine have been exchanging missiles. There are dozens, if not hundreds at this point, that are dead. Buildings that have been, destroyed, collapsed, cars, like they're really tearing up their part of the world. And so, this isn't anything new. This is going back to 1948. But at this point in time, we have to really think about what we're doing. So the Biden administration has now decided to send an envoy into the Middle East to try to help calm the issue. But is it too late? Because you have to think about what we're really doing at this point. We're doing something that Clinton did during his administration. We're doing something that Bush turned around and did after 9/11. We're sticking our nose into the business that deals with Islamic countries, that deal with countries that we still get lots of resources from. So at this point in time, with tension so high, we shouldn't have allowed them to get this high in the first place. But now that they are this high, we're sending troops. That always sparks a thought of war. That always sparks the thought of conflict, or more elevated conflict, when you start talking about sending troops. So now we're sending troops overseas to help Israel, to be alongside an ally, which is not going to sit well with countries who we do business with, and then just Muslim and Islamic countries, period. So yeah, this kind of transitions now into the talks of oil, because anytime you start talking about sending troops overseas, anytime you start talking about putting boots on the ground, that sort of thing, any of that language always sparks the sense of we're going to have issues with oil. We have not become oil independent as the United States. We're shutting down two major pipelines, Keystone and Dakota, that come from Canada and come from our oil sand regions of the United States, because this current administration wants to be clean energy. So a lot of the cars that are here in the United States, over 80% of them are still fossil fuel vehicles. So people still need gasoline. It's not feasible right now to just say, we're just going to cut off pipelines. So now during this situation where we have the Colonial pipeline that was hacked by a Russian group, who've claimed responsibility, who have, they want the ransom. The pipeline has been patched over enough for them to actually kind of restart flowing oil. But in the midst of all of this crisis right now, you have troops being sent overseas. You have the markets crashing off of that. You have the thought process of we're putting boots on the ground in the Middle East, where we're still getting oil, where we're now actually having to get more oil because we're shutting down pipelines. We have issues with supply on the East Coast. And just to kind of take you guys back a couple of months to an OPEC meeting we talked about. So it was a JMMC OPEC meeting. And I explained to you guys that Russia was coming in and they wanted to increase their exports of oil. They were asking Saudi Arabia to decrease their exports. So Saudi Arabia agreed to decrease their exports in oil. The United States did not agree. The United States was like, no, we're not cutting our exports. We're going to keep our exports the same. Canada agreed to decrease their exports. So in the Middle Eastern region and in Europe right now, most of the oil is coming from Russia. Russia's sending oil to Iran. They're sending it to China. Well, right now we're in the middle of a crisis where over 70% of the gas stations in North Carolina have no gasoline whatsoever. So in these types of emergencies, this is when we would call on the Middle East and say, hey, we need tankers, we need fuel like right away. Well, Saudi Arabia, this whole supply that they have that they're exporting is going straight to the UK. It's going to Australia. It's going to New Zealand. So where do you think we're getting our oil from right now? We're getting our oil from Iran. Well, guess who Iran is getting their oil from? Russia. So we're literally getting oil from Russia, who just hacked our pipelines. So essentially, that whole meeting that we had with OPEC where we didn't back down, we're having to pay Russia a premium for oil right now, for them to rush it to us. We're having to pay a premium because we're buying it through another country who puts their tax on it. So this whole situation of putting troops overseas, the whole situation of the pipelines being shut down, the Keystone and Dakota pipelines that Biden started to shut down at the beginning of his term, that's causing a huge supply issue. It's causing a supply issue, not only for oil, but for commodities, because what do you think it takes to run farm equipment? Fossil fuels. There are very, very, very few companies out there that make farm equipment that run off of alternate fuels. You need some type of fossil fuel to run farm equipment. So prices of commodities are up, not only because of the fuel, but because of some of the things that I was explaining to you guys that happened last year with supply and demand. So supply and demand is completely off right now. Sticking on the topic of oil and the pipeline and gasoline, I said that 70% of the gas stations here in the United States are without oil, without gasoline, like they are completely out. So, yeah, supply and demand. We can't be stupid with commodities. We have to be very, very smart and strategic. So when I put the message in the group chat, I said plan accordingly. For those people out there who know you have to travel, you know you're going to be in your car on a day-to-day basis, you have to plan when you know something like this is going to happen to make sure that you're good. But if you know that you work from home and you don't have to go anywhere, why are you filling up your car? Because the only thing you're doing is making gasoline more expensive for the people who literally do have to go from point A to point B, C, D, E, F, G every day. It's a commodity supply and demand system. People say that it's price gouging, but if you knew and know how gas stations work and how the corporations work that send gas to these gas stations, you'd realize that part of it is not price gouging. So what happens is a gas station will get their oil supply, they'll get their gasoline supply. So if I accidentally say oil when I'm talking about a gas station, I'm talking about gasoline. So when they get their supply during the week, they know how much they have. They know the price that they can set it at. Part of that price is taxes that you're paying. Part of it is corporation getting their money. The other part of it is the gas station owner getting paid as well. So when the supply dwindles down, typically what a gas station owner will do is call and get more fuel. But when Colonial has already told the gas stations, we cannot send you anything. So the supply that you have right now is the supply that you have. They know that the supply that is currently in their tanks is it. So that at that point, it becomes a premium. So what ends up happening is whenever a gas station prices gas, they price gas based on how much it's going to cost for it to get pumped to them and how much the corporation is setting a price at. So when gas becomes a premium, gas automatically ticks up because supply and demand is really and truly becoming the focus at that point in time. So if you have 100,000 gallons of gas in your tank and you know that that's it, and people are coming and getting your gas and they're coming at a rapid pace, and you have a line out and down the street of your gas station with people trying to get gas, the one thing the corporation is going to do is say, okay, it's going to take us this much money. It's going to take us this much more to get gas to you and get your tanks full. Because think about it, those trucks that carry gasoline have to also use fuel. So it's going to cost more for the corporation to send gas to that gas station. So as the supply dwindles, demand is high, prices are going to go up. That's just supply and demand. That's how it works. It's not always price gouging. Price gouging in the law when it comes to gas is like 15 to 20 cent hikes. Like if you look at gas over the last month has ticked up 15 to 25 cents. Now that supplies are super, super low, what a gas station can do, and it's legal by the corporation because they are an umbrella under a corporation, is set gas prices at a level that will try to deter people from buying gas. And that's a last ditch effort from the corporations to try to hold on to current supply. Because what is something that is super important to all of us that we would need in an emergency that has to use gas? A fire truck, an ambulance, police cars. These vehicles are having to use the same supply that we do. How many times have you pulled up to a gas station and you've seen a police car? Like, think about these things. They don't always have to use a gas station because most cities have an emergency supply. But what happens when that emergency supply is gone? I just said 70% of the gas stations in North Carolina do not have gasoline whatsoever. It is not smart to go out and panic, buy, and hoard. Did 2020 not teach anybody anything about hoarding? It's not a smart thing to do. I'm not saying that anybody on this call did that, but tell your friends, please, because it's not smart. We're going to go through the rest of 2021 dealing with the same stupid backwards mindset of 2020 of hoarding. It's stupid, it's ridiculous. And for everybody who's like, oh, I hate corporations. You hate corporations, but you're hoarding their products in your house and you're hoarding their gas in your house and in your car. You're just putting billions of dollars into their pockets right now. The smart thing to do would be to sit down. If you don't have to go anywhere, don't fill up your tank and watch prices drop. If you ever wanted to stick it to a corporation, don't buy during the pandemic. That's what they expect for people to do. That's why they leak news to the media and say, hey, XYZ, or hey, we're not going to manufacture this anymore, or we're having a hard time, quote unquote, a hard time getting this out. And the media blows it up because why? Everybody is so freaking emotional. Why? Use your logic. Everybody has a brain. Use your logic. Get what you need. It's not that hard, because whenever you let the corporations literally use you as they're puppeteering people through the media will literally grab a hold of your emotions and you'll get fear. That's why we tell you guys not to trade on fear. Don't use your emotions, use your logic. This same mindset of hoarding and getting scared when things like this happen, is that same mindset that carries over into trading. When you trade and, oh my gosh, the market's going down, I need to get out. Oh my gosh, the market's going up, I need to get in there. That's that same emotional push and pull, fear and greed. Why? Use your logic, be smart, because if the market's going down, how do you know that you haven't gotten in at the bottom? If the market's going up, how do you know you haven't gotten in at the top? Just like people going out buying gas right now, you're buying gas at a super premium. Why? Because last year in April, gasoline prices, oil prices were in the negative. Gasoline prices today are in my area, are $1.36 more than they were exactly a year ago today. So gas prices have doubled. Gas prices last year in my area were like on average $1.50. I went around today, like gas was like $3 at some places, $3 and some change. Like, why are we letting corporations do this to us? It's not a smart way to function. People say they're woke, but you're not woke if you're letting a corporation push and pull on you like this. So you have to really sit back and think, what is the smart thing to do at this point in time? That's why I said plan accordingly. Always have a plan. Even if you feel like you're never going to have to use it, have a plan. Have a plan for what you and your family are going to do in situation X, Y, Z. Just have a plan, because you never know when you're going to have to use it. Everybody thought years ago, oh, we're not going to have to deal with the oil crisis again. We're not going to have any more oil shortages because the United States says we're going to be oil independent, energy independent. We're not going to have to depend on the Middle East. And now we're depending on Russia, our quote unquote enemy. We're having to depend on them for fuel. Congratulations. All right. So I'm getting ready to screen share, and we're going to go over the Forex Factory calendar. I have pulled up a link. I was going to show you guys. We were just going to talk about all the states, the gas shortages that each state had, but there's no point at this point in time because all the states on the East Coast have some type of shortage that's not normal. So there's no point in even trying to talk about that right now. All right, so what we are going to talk about, because we're talking about inflated gas prices, we're just going to talk about inflation, period. Because I had already told you guys, I expected these CPI numbers to be high. I expected that prices were going to increase. I expected that people were going to have to pay more for products. So in addition to having to pay more for gasoline right now, you're having to pay more for fast food, you're having to pay more for groceries, you're having to pay more for everyday items in the grocery store. So what I want you guys to do, just to prove my point, go back and look at your, a circular from a grocery store last week compared to this week, and then compare it to maybe the week before that. Look at how prices have increased. What they'll do in a grocery store, any retail store, is they'll have a sale on an item. And when that item goes on sale, they'll drop the price 10 cents, 20 cents maybe. But then when it goes back to quote unquote regular price, they'll increase it 10 cents above what the price used to be. A sale is a good way to change prices without people really realizing it. So today is Wednesday. So a lot of the grocery stores would have potentially started a new sales week today. So just look at what prices were yesterday, even compared to today. And you'll see that there was a price increase, almost a 1% price increase on core CPI, which is the consumer price index numbers without automobiles and a lot of the long-term items that we keep and hold in our houses. So we keep talking about inflation, we keep talking about prices, we keep talking about the dollar, but I want to give you a definition of inflation that puts both of those things together. I want to give you the economics 101, econ 101 definition of inflation. So that definition is inflation being a general increase in the price of goods and services in any given economy, and the decrease in purchasing power of that money. So what that is essentially saying is that the price of goods and services are going up, but the amount and the ability of your dollar to stretch is becoming less and less. I always give you guys the example of a rubber band. It's like having a rubber band that's super elastic to begin with, and then slowly but surely you're not able to stretch it as much. So that's essentially what inflation is. It's you going to the store. I give the example of the candy bar. You know, candy bars used to be 50 cents. You could buy 2 of those with $1, and now you can't even buy one with $1. You have to have $1 and, like, I don't know, 20, 30 cents maybe. So that just talks to the extent of inflation, how much now the dollar is not able to stretch. You're not able to stretch the dollar nearly as much as you used to. This is what CPI is. That's what CPI is telling us. It's telling us that you're not able to stretch your dollar as far as you used to. I asked the question in the group earlier today. If you were to save $10,000, or if you were to have put $10,000 in a savings account in 2001, how much would that money be worth today? And the answer would be about $6,400. I know some people might be like, oh, well, I had it in there and, the bank was giving me interest. The bank was giving you less than 2% interest, I'm sure. So if the bank was giving you less than 2% interest, you were not making any kind of money. Just because the bank pays you an interest rate means nothing. If it's not over 2%, it's nothing. You're paying the bank. You're paying the bank and you're losing money at the same time. So keep that in mind, because if you were to put that $10,000 into a bank account, yeah, it might say it might say 11 or $12,000 in there, but you have to take into account what inflation is like from 2001 up until now. That is 20 years of inflation. In 2001, I probably could have took $1 and bought 2 candy bars for $1. But now I can't buy one with $1. I have to take $1 and then part of another one. So there's that inflation. If you account for that inflation over that amount of time with $10,000, it did not grow at all. It shrank. However, if you were to have invested that $10,000 either into an IRA, the S&P 500, the Dow Jones, or into any type of investment vehicle, your money would have grown to almost $68,000 at this point in time. It actually would have grown, and you would have beat inflation and gained money on top of that. So that's the difference between saving and investing. Saving gets you nowhere. Saving with the interest rates that banks are offering you today will get you nowhere except in the same spot, if not lower than where you are in the next 5 to 10 years. Banks are not planning on increasing interest rates. When the banks had a chance to give you a higher interest rate after the banking crisis, they did not do so. Had they done so, everybody's interest rate would have been 3, 4, 5%. Interest rates would have been high. You would have been making money. But banks chose to not increase interest rates for the consumer. They kept them the same. And then here we are. You have people who are struggling. You have people who are now taking their money out of the bank, putting them into NFTs, putting them into crypto, putting them into investment vehicles and Forex, because they see that the banking system as it is set up right now is not working for the people. All right. So speaking of banking system, we had a speech today from the Bank of England governor, Bailey. A lot of what I heard today from the Bank of England governor was some of what I was telling you guys about, wanting to hear about how the country plans to grow their economy now that Boris Johnson wants the borders open. They have a little bit of a supply and demand issue when it comes to their country, imports and exports, because they have a high demand for items that are outside of the UK borders, but they're unable to get them. And then there are countries who want items from inside of the UK, but the UK is having a hard time sending them out. And that's just because of some of the laws and some of the things that weren't really ironed out when Brexit ended. They just need to be fleshed out between the UK and some of these individual countries and companies, but individual countries. So we'll definitely just be keeping an eye on that, because if the UK opens up and they get back to being open at least 70 to 80%, then that will be a signal, at least in my mind, to the United States to say, hey, the UK is doing this. We need to go ahead and open up. We need to go ahead and stop being, pansies about the coronavirus and open up. Because at this point in time, when it comes to those who have gotten the vaccine, most of the people, according to studies and according to surveys, most people who have wanted the vaccine have gotten it. Most people now who have not gotten the vaccine are on the fence. Most people are on the fence. The number of vaccinations that are being given week over week has been dropping, but the number of people who are still, without the vaccine is pretty stagnant. Pfizer just released the vaccine or approved the vaccine for 12 to 17-year-olds today. So that will be rolling out for teenagers within the week. So, for those parents who wanted their kids to have it, or for the teenagers who wanted to have it, they're going to now have that option. I'm not going to harp too much on oil, but one thing I will say is that next week, looking at oil inventories, I expect that we are going to have a decrease in inventories. Just seeing as how, we do have corporations and we do have a lot of the gas companies who are having to let go of their reserves. I do expect that we will have given away, well, not given away, but we'll have barrels of oil that will be out of the reserves. This number will be positive slightly. The only reason why I say slightly is because we can't have corporations giving away all the oil before we know for a fact that we can get it put back into reserves and sent out to the people. As far as the state of the Colonial pipeline, I mentioned it earlier, but right now, they are starting to reopen the pipeline. The biggest thing is they can't reopen the pipeline the way that they want to because of the ransom. So there was a ransom that was placed on the whole system. Colonial is refusing to pay that ransom. So in order to get the entire pipeline established again, they'll have to manually go through and open these oil checkpoints. They're valves, but essentially it will be a manual thing. So that's laborious. It's, intensive to try to get that whole network of pipeline reopened again. So Colonial is just trying to work right now on their end to just reopen the pipeline as much as they can and kind of circumvent this ransomware that's been placed on their software. So we'll, keep an eye on that. Let's see. One thing I did want to mention though, actually, because I'm gonna expand a little bit more. I said I wasn't, but one thing I want you guys to realize is that I put in the group chat a picture of the different power dams and the different power plants that we have across the United States. And I want you guys to realize something. A lot of people don't know this and don't think about it on a day-to-day basis because you don't necessarily have to. But when it comes to the infrastructure in the United States, I know people might say Biden's working on that now, but our infrastructure is old as hell. It is what it is. It's old. It's super old. our infrastructure for some things has not been updated since it was created. So when we talk about this pipeline as a one-off for, oh, it can't happen anywhere else, when you think about the technology for our power grid right now can't handle a hot summer in California. It can't handle cold weather up north. We have rolling blackouts now in places where you've never heard of a rolling blackout. So what I'm saying is, don't think that this is just, oh, a one-time thing. Think of this as, we really do need to update our infrastructure here in the United States, our power grid. If we didn't learn anything from what happened in Texas earlier this year, is that our power grid in the United States is set up it's so stupid. The way that it's set up is stupid. The way that power is divided is stupid. The way it's sent out is stupid. The way the grid is set up is everything about it is stupid. It's old, it's archaic, it needs to be redone over again. The technology needs to be updated, not only for power, but for our train system, which is old, for our nuclear power plants, which is super old. And we have like 4 nuclear power plants in North Carolina. So like, yeah, that matters to me. I care about what the nuclear power plants technology is like, because I live less than 100 miles from 2 of them. So I care. The infrastructure needs to be updated. So I put that map in the group chat, not to panic, but to inform you. You need to know where these things are in regards to where you live, because I just said, hey, you need a plan. If you had to make a plan about something in life, about what would I do if, there you go. You have some information that you can build a plan off of. All right, so moving on. Tomorrow in the news, we have unemployment claims, super important, because we'll be looking at these numbers now coming off of NFP. We had our jobs numbers last week, so now we're going to be looking to build on top of this. I'm looking to see less people or fewer people on unemployment. This will be a sign that we're getting more people back to work. I understand and I know the logic behind people having their own companies, trying to start their own thing, trying to get out of the rat's race. But at the same time, when you understand how the economic machine works of capitalism, we have to have people to work. We have to have people out there who work to make money, to help the corporations make money, so that the whole cycle can go around and around. It's super easy for us to say, well, I want to start my own business. But at the same time, if you start your own business and you grow, you're going to need workers. And if people don't want to work, how are you going to grow and expand your small business? So it is a logic behind having employment outside of the home. We do need people out there in the workforce working. Tomorrow, we also have a speech from the Canadian Bank of Canada governor. We have another speech from the Bank of England governor. We have a speech from our Fed member tomorrow as well. And then we have our 30-year bond auction. So those bank officials who are speaking, essentially what I'm looking to hear from them is continued consistency of what they plan to do with the dollar, with their currency, I should say, going forward through the rest of the year, and how they plan to handle inflation should inflation grow to be, over what they forecasted. Because if we look at inflation is not just happening here. We actually pass inflation along to other countries as well. And then that in turn, for some people helps, for some country it harms their citizens. So we have to look at that balance there. And we get to hear that from other countries, not necessarily our government talking about what we do for other people. And then Friday, we have core retail sales, industrial production, and then preliminary consumer sentiment. So the consumer sentiment numbers for next month that we'll be looking at are being calculated and asked right now. So one thing I want to point out is, when you start having talks of troops going overseas, gasoline shortages, price inflation, like when you start hearing all of these things, people get really scared. So consumer sentiment, not this time, not for Friday, but for next month, I don't expect for it to be well. I don't expect for it to be well because people are answering based off of what's happening right now, like what you're seeing in the news now, what you're going outside experiencing right now. That's what people are going to be responding based off of. So I don't expect for those to be well at all. Core retail sales and retail sales, I do expect that people have spent more money. I just don't know to the extent that people spent money. We did talk about this a little bit on the last Zoom call. Um, I know people spent money. We see it in the marketplace that people have spent money, but people have spent even more money paying down debt and putting money into investment accounts or Robinhood, or just putting it somewhere where they expect it to grow. Um, so I'm just really interested in seeing what people bought and how much they actually bought. So that's that. Just another 2 or 3 topics, and I'm going to turn it over to Mr. Levels. So looking at crypto prices, especially Bitcoin right now, Tesla and Elon Musk have stopped buying Bitcoin, have stopped offering it as a payment option for Teslas, because they're citing extreme fossil fuel usage that it takes to mine Bitcoin. But when you think about it, they already knew these things. Elon Musk has done interviews before where he talked about this issue. So he already knew this. I just think that, seeing as how the market couldn't make a new high, it couldn't break back into the $60,000 range again. I felt like, that was the true reason for why they were selling, but they have to, and they're not offering it as an option anymore. So in my opinion, that's the reason why I feel like they're not offering it anymore and they, are selling their Bitcoin. Also, I just want you guys to keep an eye on policies. We've talked about, all the promises Biden has made versus the things he's doing and things he's backtracked on. Keep an eye on that because, those are the things that for people who did vote for Biden, those are the things that you voted on him because of. Just make sure we don't end up in like a Jimmy Carter, early President Clinton type situation, where you get a lot of promises made, you get crisis on crisis, and nothing ever gets done about it except for cowering in the corner. Hate to call Carter and Clinton cowards, but I mean that's kind of how it happened. And then the last thing I wanted to point out to you guys, and this is it, talking about unemployment claims. So we know that Biden has been pushing, and there are some states out there now that are pushing towards a $15 minimum wage or a higher minimum wage limit. So in talking about jobs and job creation, I want you guys to understand that if this becomes a federal mandate and everybody wants to have a business and nobody wants to work outside of the home, these small businesses, your small business, you will be required to pay $15 as a minimum wage. How feasible do you think that would be for every small business out there to be able to pay their employees $15 an hour? How feasible do you think it will be for corporations to pay all of their employees $15 an hour? Automation has already taken over some corporations. We don't want to see a crippling of, middle class and small businesses. So I feel like, in my opinion, this should be an option. The one thing I'm looking to hear are those lobbyists for the small businesses, are those lobbyists for those people who are, struggling at this point in time, saying, hey, we need help because when these talks are going on, like some of the talks that happened today about infrastructure and the American, plan, the American family plan, those talks are super important, but you have to think about it. $15 minimum wage sounds good for the employee, But for the employer, whether it's a corporation or a small business, they have to really think about that. They have to think about how long they would be able to keep their doors open, what the prices of their products will be like, what the supply chain would be like. You know, they have to take a lot of things into consideration. So if you're a small business owner, you own a big business, small business, you work for a business, you know, think about those things. Like, we don't think about the bookkeeping part of it, but all of that is super important in talking about the balance between getting people out into the workforce and people starting their own businesses, and you know, that whole talk that we always get into with, you know, corporations and such. All right, you guys, I'm going to stop sharing my screen now, and I'm going to turn it over to Mr. Level so that he can get started with the technicals. And yeah, if you guys have any questions, you can either put them in the chat or you can save them to the end.
Yes, sir. I don't know if I want to go after that. Oh man, you dropped the bomb that time, Combs. Y'all heard it here. K Mentals. Boom. There goes the dollar. It's crazy. So yeah, let me go ahead and jump into these midweek technicals for y'all. See what we got going on here. Let's see what we got going on looking back at Monday night. What do we have here? So, I told you guys Monday that I wanted to see the dollar give us some bullish momentum to start the week out with. I told you particularly that I want to see the dollar come up into this area right here and fill in this area of imbalance. And what do we have here today? We see that that has been achieved. Isn't that amazing? So we already know that our currency pairs that we trade, um, they trade in the opposite direction of the dollar. And so I told you guys Monday, of course, that I wanted to see Euro USD come down and fill in this area of imbalance. And voila, we're here. And so what I'm interested to see now is how the dollar plays out for the rest of the week. We will look back at that, but let's just look back at GBP USD first. Same thing, GBP USD is another currency pair that moves in the opposite direction of the dollar. So told you guys Monday that I wanted to see GBP USD come back down to retest and get up in this area here, and we're here. So looking at NZD USD, NZD USD bust through both areas. Beautiful, beautiful. Same thing, told you guys that I expect the NZD USD to be bearish to start the week out, and we're here. So let's move on to our metals. Looking at silver, same thing basically. Told you guys Monday that I would like to see silver give us some bearish momentum, being that silver also moves in the opposite direction of the dollar. And so we see that Monday we were here. We had this slight push up, but we didn't break above this structure nor above the previous high. And then we see price sold off to come down and fill in the area that I had marked that I wanted to see price fill in. So silver, I'm pretty sure that's about 5,000 pips or something with silver. Oh yeah, it's like 7,000 pips. So it's crazy. Gold, same thing. We know gold move in the opposite direction of the dollar as well. So we see we did get back down into this imbalance that I wanted to see price come back down into. Let's see where we was at Monday night. We was right here on the call. This is between the hours of 8 and 9. We're on the hour chart. So we see we had a slight pull up, but price didn't come back above the high. Actually gave us two opportunities for that sell. One right here. It's like, and then another one here today. So it's beautiful. Looking at oil, I'm expecting to see oil just keep rising. Let me look at it on a daily chart one time. Oh yeah. See some. It's crazy because just thinking about the cycle, how everything played out last year. Corman was short U.S. oil last year around the beginning of the year because if you recall back, and we still have the documentation and we still have the Zoom call recording. Corman was short U.S. oil because of everything that was going on in the economy and everything that was going on with the U.S. and Israel. And I think it was like a day, the very next day or like 2 days later after she called the short for U.S. oil went to zero, like literally went to zero. And everybody that was on the team back then, we all enjoyed that ride down and we've been enjoying the ride back up. But it's just crazy to see that cycle, how this was the liquidity run, and now it's coming back to mitigate out of that and take us back up to retest previous highs and potentially break through previous highs. That's $77, $112. We could easily see oil break those highs with what's going on in the economy right now. So hint. So moving on, last but not least, my baby girl, U30. Drop her back down to the hour. Take you back to Monday night. I told you guys we was right up in. We was right here Monday night. And I told you guys that I wanted to see US 30 start out the week bearish. I gave you a few different scenarios. For one, I told you that price could come back up and retest here. I had drew it out for you guys, something like this. And I wanted to see this area of imbalance filled in and potentially these lows right here taken out. And I told you guys that we could just see U30 tumble on over and just sell off and then come back and swing up and retest these highs and potentially take these highs out. So we see that was dead on the money. Time and price, if we look at Tuesday morning, the next morning, 3 a.m., London market open up. Which way did it open up? Bearish. 9 o'clock, New York market. I'm going to have to go down to the 30-minute because New York market's open at 9:30. So which way did New York market open? bearish. So yeah, why did you even need to be, if you trading our strategy that we trade, time and price, why do you even need to still be in the market today? I know I'm not. If I wanted to be, I could be, but that would just be greed. That goes back to that whole thing what Corman was talking about, greed and fear. A lot of people want to jump in the market now because they fear that they're gonna miss the move, and they already missed the move for the week. This was the move. How do we trade time and price? We know time and price give us our setups on Monday and Tuesday, and sometimes on Wednesday, with the exception that we got high impacting news on Thursday and Friday. But other than that, we trade Monday and Tuesday, and we'd be lucky to get a time and price set up on Wednesday. But other than that, that's real time. Um, I don't know nobody else that can do it like that. I mean, I know Carmen do her thing on the fundamentals, but I'm just saying, I don't know nobody else that can do it like that. Romaine Boston, I don't care who you name, them guys from CNN, Bloomberg, CNCB, whoever I don't put me up against any of them. Let me at them, Uncle Scooby. So with that being said, we gonna see what this dollar gonna do now that we've came up and fill in this imbalance. I would like to see, of course, some correction out of the market, maybe come back down and retest yesterday's low. Yeah, yeah. Maybe come down and retest yesterday's lows. And then if the dollar gonna keep on pushing up because of this little inflation we got going on right now, we could see the dollar. Y'all already know what I'm looking at. If you been paying attention and you been rocking with me for a while, your eye should have picked up on that. These even highs right here. Look at these equal highs. So clean. What's that? Liquidity. A liquidity pool. Yes, sir. Beautiful, beautiful, beautiful. However, we wait on time and price. And I always remember, I don't predict the markets. I roll with the market. So I roll with the markets, and I can just see it. And from my mentorship, from my mentor Michael Huddleston, the greatest trader to ever do it. Yeah, it's up there. So at this time, I'm gonna end this recording, and I will take any questions.